Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. So we've got a choppy session overnight, and this overall saw stocks rising slightly thanks to a rally in technology names following a surprise U.S. tariff exemption from President Donald Trump. The Dow Jones Industrial Average added 312 points, around 0.8% up to 40,525. The Nasdaq Composite rose 0.6%, and we have the S&P 500 adding 0.8%, settling at 5,406. So let's check in now with Christine Short. She is the Vice President of Research for Wall Street Horizon. Christine, how are you doing today?
I'm doing well, partially because of the aforementioned relief that we got today in the market.
That's right. I know you were hoping for a boring week, so not really playing out in the past few days. Walk us through what's happening here in the latest session. Have we seen things bottom out so far? Maybe Donald Trump thinking, no, these tariffs are not going to work.
Well, I am watching futures, and those are sliding a little bit right now. So I don't know if we're completely out of the woods, but we'll take today's, result, like you said, due to those reciprocal tariff exemptions in the tech space, so on certain consumer electronics like smartphones and computers. That's why you saw Apple pop a little over 2% today. On networking equipment as well, computing products such as graphic processing units, that's what NVIDIA is known for. They were up around 3% at one point today, but they ended about flat. Both of those companies I will mentioned have committed to invest up to $500 billion in the U.S. You do wonder if the exemptions have to do, if that was already in the pipeline, or if the exemptions have to do that, because they've mentioned that would take quite some time to build up facilities here in the U.S. However, like I said, futures are down, so I don't know that markets are, the exemptions in tech, the Trump administration did say could be temporary, so we're still kind of in wait-and-see mode here. It's really hard to say with tariff proposals shifting seemingly every day. That's why I mentioned to you when we emailed, I'm hoping for a boring week. I missed those weeks where there was not much news or only good news. But we'll see. And then, of course, we've got Q1 earnings reporting as well, and that will give us some more color on what companies are saying about tariffs.
Yeah, we've been seeing some companies looking for plan Bs, Apple one of them, shipping 600 tons of iPhones from India. So perhaps that played into the decision. How much did the consumer strength in the U.S. play perhaps into these decisions where you have, of course, supply chains potentially going to be hit and those costs being passed down the road?
Yeah, many that make consumer products or consumer goods, many of those companies have not minced words and said that these tariffs will likely get passed on to the consumer, whether it's temporarily while they set up factories elsewhere. One way or another, the costs get passed on somewhere, and it's typically to the consumer. So whereas tech might have, maybe more of a chance because of these exemptions and moving, facilities, consumer discretionary is a bit of a different story. Apparel likely to be hit the hardest. The U.S. gets around 97% of its clothing and footwear from abroad. We've already heard from many names in this space sharing their plans, like you said, of what they might do. Steve Madden, the footwear maker, looking elsewhere outside of China to, bring their facilities. Columbia Sportswear, talking about tariffs getting passed on. So you kind of have a double whammy in the consumer discretionary sector, because not only are they, apparel names going to get hit pretty hard here, but you also have a U.S. consumer that's been softening for quite some time, a few months, even prior to tariffs. We saw over the holiday season that retailers were having to offer pretty deep discounts to get consumers in the store. So consumers are very value-driven. They're looking for a bargain, and they are being a little more discerning with how they spend their discretionary income. So it's, like I said, a double-edged sword here for the consumer discretionary space.
All right, let's talk about the playbook in this tariff environment. What should we be gravitating towards? Should we be looking out for companies with local supply chains? What are some of the safer places to park your money in right now?
Yeah, I think typically playbook when there's any sort of uncertainty is go with the defensive names. Cyclicals like consumer discretionary and like tech might get harder hit by tariffs. So maybe you want to look at healthcare, utilities, telecom, consumer staples. And those are usually a good bet. However, I would say not all of these are safe from tariffs. We know within healthcare, President Trump announcing today that new tariffs are coming soon on pharmaceuticals. What would that do to the price of medications and some drug shortages that we're already experiencing here? Consumer staples, there have been, names that have come out and said, tariffs on things like aluminum and steel would impact how they produce their goods, like Campbell saying, they use steel for their cans. That would hit the cost of soup, Coca-Cola. They'd have to switch to plastic bottles. And so even though these things are necessities, there's still going to be likely increased costs. Now, utilities and telecom are probably a little bit safer. Again, they're necessities. They don't have as much international exposure. Mm-hmm. They should do better than other sectors in a high tariff environment.
All right, Christine, talking about safety, government bonds typically are a place to look for safety, but they've been selling off alongside the stock plunge. What does it tell you about the mood around how investors see the U.S., for example? And, is this something to still consider as a safe haven?
Yeah, that was rumored to be the reason for the 90-day pause in most of the reciprocal tariffs that the Trump administration put into place, because, as you said, bonds are usually a safe haven. But that, those trading down did cause some concern about investing in the United States and where we stand globally. So certainly keeping an eye on the fixed income space as well, because, like I said, those meant to be a safe haven, and what happens when they no longer are. So I think that's why you're seeing some of the concessions that are being made now.
Yeah, does that point to odds of recession in the U.S. just creeping up higher every time we look at how these tariffs are potentially going to have a knock-on impact on the economy, and of course the responses from other trade partners as well, and then from earnings calls as well? How much are you seeing this worry of a recession?
Yeah, it's funny because last quarter, FactSet did some great research on the number of mentions of tariffs on Q4 earnings calls. I think over half of S&P 500 companies mentioned tariffs as a worry, but only 12 mentioned recession. And like you said, this quarter we're only, 30 or so companies into the reporting season, but you're starting to see the mention of recession a little more. The big bank executives, you had Jamie Dimon from JP Morgan out there doing the media circuit. He also had a shareholder letter he released. And he talked about with the recession being the likely outcome if tariffs were to continue the way they were proposed on, quote-unquote, Liberation Day, April 2nd. So you're seeing more banking executives, you're seeing more executives in general. You're even seeing billionaires that supported Trump, Ken Langone of Home Depot, you had Ken Griffin of Citadel, even Bill Ackman, all have come out and have said, somewhat negative things about tariffs and the worry of those causing a recession. So I think you're hearing the business community come out and speak a little louder this quarter now that, the trade proposals are I wouldn't say more clear, but that they have excelled to a level that was not expected when those announcements were made on April 2nd. So I think that's going to be a theme of the Q1 calls. You're going to hear more. And as you said, we've already seen many banks come out and increase their probability of a recession.
Yeah, so lots to watch out for. And of course, those concerns about a recession, we'll see how much that might manifest down the road. We've been in conversation with Christine Short. She is the Vice President of Research for Wall Street Horizon. Christine, thanks as always for your time and insights. Great chatting with you.
Thank you so much for having me.
All right, we'll catch up again soon, Christine. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.